Choosing the right business structure is crucial for any organization. Today, we're comparing two popular options: limited liability companies, or LLCs, and 501c3 nonprofit organizations. Understanding the key differences in taxation, ownership, and structure will help you determine which entity best suits your goals. Let's start with LLCs. These flexible business structures combine elements of corporations, sole proprietorships, and partnerships. LLCs are designed for profit generation and offer members limited liability protection. This means owners cannot be held personally responsible for the company's debts. On the other hand, 501c3 nonprofits are organizations established to serve the public interest. They enjoy tax-exempt status but must meet strict Internal Revenue Service requirements. All assets of a nonprofit must be reinvested into the organization, given to the public, or donated to another charity. One of the most significant differences between LLCs and nonprofits is how they're taxed. LLCs are typically treated as pass-through entities, with profits and losses flowing directly to members who report them on their personal tax returns. However, LLCs can elect to be taxed as corporations if desired. 501c3 nonprofits, in contrast, are exempt from federal income tax. However, they may still be subject to state sales and property taxes, depending on local laws. Nonprofits must also comply with unrelated business income tax if they engage in commercial activities outside their core mission. When it comes to ownership and control, LLCs provide direct ownership and profit sharing among members. Nonprofits, however, have no private ownership and are governed by a board of directors. This difference in structure affects how decisions are made and how funds are distributed. Funding sources also differ between the two entities. LLCs generate revenue through services and sales, while nonprofits rely on grants, donations, and fundraising efforts. This distinction impacts how each type of organization operates and grows. Both LLCs and nonprofits face unique challenges. LLCs must navigate complex tax regulations and may struggle with raising capital. Nonprofits, on the other hand, must adhere to strict regulatory compliance, face restrictions on the use of funds, and often deal with ongoing fundraising challenges. It's worth noting that in some cases, an LLC can be converted into a nonprofit. However, this process is complex and requires significant changes to the organization's structure and purpose. The LLC must adopt a charitable purpose, potentially dissolve and reapply as a nonprofit corporation, and obtain IRS approval for tax-exempt status. When deciding between an LLC and a nonprofit, consider your organization's primary goals. If you're focused on generating profits and maintaining direct control over your business, an LLC might be the better choice. If your mission is to serve the public interest and you're willing to comply with stricter regulations in exchange for tax benefits, a nonprofit structure could be more appropriate. In conclusion, LLCs and 501c3 nonprofits serve different purposes and operate under distinct rules. LLCs offer flexibility and profit-sharing opportunities, while nonprofits provide tax benefits and focus on public service. By understanding these key differences in taxation, ownership, and structure, you can make an informed decision about which entity type aligns best with your organization's mission and goals.